Okay, welcome to this final part of Module 5. We're going to actually look at something very specific, a very specific type of spoofing, type of algorithm that comes to the market that's called flipping. So we're going to actually try and define this in this part and try and identify the conditions in which it does this flipping technique. So what is so-called flipping and how do we identify flipping conditions? Well, market flipping conditions. And we'll try and make this short and sweet. It's a very specific type of algorithm, but something that all of our traders of FUTEX keep an eye on. Most of us try and trade it and can trade it profitably, but there's very few within the firm that can trade this sort of algorithm extremely profitably. And in fact, it's probably their cash cow where they make 80 to 90% of their profits. Obviously, these are rough sums in my head, but there's a few in the office. I'm not one of those that can trade this flipper type price action very well and with extreme consistency. Now, with this flipper, before we actually define what it does, we'll actually start with a little bit of a background on what the flipper is. Why did it get this name, the flipper? What is this flipper? Well, flipper actually comes from well, it was an old trader back in the 90s, the late 90s and early 2000s called Paul Rotter. So if you look up the name Paul Rotter, you'll find quite a bit of information on his flipping transactions. And I mean, this guy used to do, on average, from what I've read, between 100K and 200K transactions a day. And on a good day, he'll do 1 million transactions, or round trips, we call them. And, that's astronomical. That's an incredible amount of liquidity is provided to the market, probably the biggest trader in the Bunds in those days. And you'd say, okay, well, how does this guy do, 10 to 20%, or sometimes even 60 to 70% of the volume in the Bund, just without moving the market so much? Well, this is the case. He had a specific skill set in which he would spoof the market and look to make very, very small profits. He'd kind of trick people into one direction and then take profit in the other direction. That's basically the premise of flipping. And if we had to just define it, flipping is when a spoofer in the market is looking for small profits. Now, they don't big profits. There's this small incremental profits, 1, 2, 3 ticks. It's just looking for a lot of liquidity getting in and out of the market. And he does this by tricking other market participants to buy / sell one way. So he'll spoof to make this happen. So he does the spoof to make this happen. And then pull the rug. Basically pull the order. So he pulls the rug and he gets filled on the other side. So let's say if he's spoofing one way and people are buying. So let's just give you a quick example. Let's just say this was 1,000. I can't see that color. Let's just say it's 1,530 lots. So the spoofer comes in on the bid at 155.80s. And that'll force a lot of traders to start buying at 155.81s. So they'll start buying, 20 lots, 100 lots, whatever, accumulate a position of, let's say, I don't know, 2 to 300 lots, for example. And as they're buying into 81s, he's actually selling 81s. So he's selling here. So he's absorbing this volume. He's now short. Let's say, if we just had to quickly draw that in blue so you can see it. So he's short 300 lots at 81s, and then he'll pull the rug, basically remove the 1,000 contracts or whatever it may be he's put on the bid. He'll pull the rug, take out the complete bid, and whoever's now bought it there sells back into this price here, but he just takes that quick one tick. So he's got filled there. People are selling now to get out, and he's getting filled now on the bids, probably at 79s and 80s. So basically, he's trying to get in and out for a quick tick or two, really. He's spoofing it, gets it up to his offers, gets filled, pulls the rug, and then the market comes off for a tick or two, and that's where he's getting out for a tick or two. And we'll actually show this on the price ladder and see what that looks like, so we can see how we could potentially trade that that sort of price action. So let's just take a look. Actually, before we take a look, let me just go through the conditions. So you can't forget, we've got to understand what conditions this works in. So let's just actually outline the market conditions, so we can start identifying when this guy comes in, this flipper. And obviously, this has changed over the years. This will change for many years to come. And I'm sure whatever I'm talking about now can potentially be outdated within a few months to a year. This flipper type price action is always adapting and changing and evolving. So if you're trading this kind of algorithm, or if you're trying to learn how it trades, you have to be looking at it, trading it every single day, and understanding and adapting with it as it evolves. The process of evolution, if you're not adapting with it, you're becoming extinct straight away. So whatever I'm going to say now is kind of relevant now and might not be as relevant in the future, but I'm sure as this goes along, we'll slowly build more videos and add more content around how it's adapting and how it's changing in the future. But usually the hours you find this in, so the hours you'll find this in, for example, in the Bund, and it'll change from each market. You'll find it between 11 a.m. and 1 p.m. London time. And this is because the flipper likes to operate. So it operates in low volume / low volatility markets. And why is that? I mean, if he's now spoofing the market with 1,500 or 2,000 lot, and someone actually takes him out, it's a volatile market. If he's got 2,000 lots here and someone actually hits 2,000 lots here, he's now long 2,000 lots in a very volatile market. He's taking too much risk. So he wants to be operating in a very low volatility market. When I say low volume, it doesn't necessarily mean it's going to be zero volume. He needs liquidity to get in and out of the market. So he needs liquidity, but when he puts in the large bids or offers, he's expecting algorithms, or either other algorithms, if it is an algorithm or if it's discretionary, to come in and actually provide more liquidity. So he does need liquidity, but it's not in a very high volume, high volatility type market. You're not seeing it when the market's wanging around 10, 20 ticks. It's usually within a 3 or 4 tick range, kind of ticking up and down, and then it'll come in, quickly try and scalp a few ticks, and he's quickly in and out of the market in that sort of fashion. So that's one of the parameters. And another parameter, I think, an important parameter to keep an eye on, is actually the structure of the order book. So if we looked on the order book, what we're seeing is before he starts becoming active, you start seeing flashing large orders. either flashing or kind of moving sporadically on the order book. They're kind of moving up and down with the market. So they move up and down in quick succession. What you'll find is these flashing orders come into the market, and they're kind of bigger than what the average size you see on the book, and they'll kind of flash from price to price. And that kind of shows you, if these big orders are flashing around from price to price, it just shows you that there's not any, you know, it's not really genuine. They're not genuine orders that are sitting there to get picked off. So these are the things you have to look at when you're understanding when the flipper is operating and how it's operating. The times in which it operates, they change from each market. I'm just specifically looking at the Bunds, and this, it operates in many futures markets. He's now trading even in the EuroStoxx. He does it with a lot of size, 3,000 to 4,000 lots. We see it in gold. Gold futures flips a lot. Oil flips. There's flips in almost every market, in the S&P 500, in the Tino, and it's a constant trading strategy that's open and in the market all the time. So you have to be aware of this if you're trading futures. You have to understand how this works. If you're reading the order book and the flipper comes in and you're looking to trade a certain position, he might be there to squeeze out a few positions. He might be there, for whatever reason, to accumulate a bigger position. If there's a flipper in there, it's important to understand when he's coming in and if it's possibly him, and to identify those features. So the next video, we'll actually look, because I've kind of run over the time on this one. The next video, I'll actually look at the flipper, and we're going to see how we could potentially trade it, which is quite an interesting little dynamic. So stay tuned.